Well, good morning, everybody. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please go ahead in the chat box and give me a number 1 to let me know that you can, I would greatly appreciate it. Nothing worse than talking to yourself for the next hour, right? Always fun. Hey, Voodoo, how you doing? Morning. All right. Hey, Jen, thank you, dear. Fantastic. Good. There we go. They just come flooding in now. Excellent. Well, I do appreciate it. Guys, I want to jump in right away and get a look at what's going on pre-market. So first off, I want to look at the ES. We'll come back to this template in a moment, and I'll share with you what I look at in the mornings. But right now, I just want to get in there and look at it. So we had a really nice move take place on the ES, which is the S&P 500 in the overnight session. It opened flat. Kind of went sideways. We had this huge huge move up, and then that V top in there, and there's where I've got my Fibonacci drawn. So from right about 4 a.m. European market time to about 7 a.m., we had this great move down, and then we had an H pattern right in there, right? We normally look for the H to take place off the 50 or the 618. It came in off the 50 percentile line. Each line you can consider to be a standard deviation. We normally get a 2-line move, which means by the time we get to the 236, about 93 or 96%, I never remember from math class what it is in standard deviation, but it's somewhere in between there, is that much of all data points are exhausted at that point. So we push back up to the 50. I don't know if we're going to continue to push higher or not today. We'll see from this point. But overall, in pre-market, it's done a phenomenal job. Great moves, good patterns in there, good moving average cross on the ES right here. Great entry and a long move to the downside with multiple points of re-entry or adding to your position with these moving average retracements there. When we look at, so ES right now is up, or the S&P 500 is up about 5.5 points in pre-market. The Dow is up 70 points. Similar pattern. We just opened up. Similar pattern on the Dow. Nice pull, move to the upside and down. We'll see if the exchanges can carry it further than the futures did. And of course, NASDAQ is just running with that continuation there. If I put that Fibonacci pattern on the NASDAQ, there's the push to the 50 percentile. 1, 2 lines right now is where it's at, right? Here's the move down. This is called an H pattern. If you don't see it, look hard. It's there. It's not a pretty H like you were taught to draw in grade school, right? It looks more like this most times, right? And if you think it's ugly, I'm going to tell you right now that is the most beautiful letter in the alphabet, because H speak in Fibonacci speak is money. Look, we're getting the bounce off that 236 level. As we said, you normally get a 2-line move, right? It goes 2 in a little bit, but 2 lines is where it tends to settle out. So let's see how we are faring first thing this morning in the other futures. Sorry about that. So we've got Bitcoin has risen from where it was earlier. Gold has had a nice increase. So Bitcoin's bottom left. Gold is next to it, right? So we've had an overall increase in price on gold, right? Then we've got crude. Not surprising. We're coming into the holiday weekend. We're going to see our highest prices of the year for now right here. Nat gas gave some back, but they've been on a tear lately, so I'm not too concerned after yesterday's move to see it kind of level and flatten off a little bit. All right. So let's see if we hold. Let's see where we go, and let's see what we can't find for today. Good morning, Manny. All right. So let's see. Let's go look at SPX first. All right. So all of the move in the ES, if we go back to that ES chart, all of the move overnight, if we've had any gains in the market from where it closed to where it is now, all of this is represented in the very first candle on the ES, on the S&P 500 rather, right? It's all there because the S&P is closed where the futures are open almost 24 hours a day, right? 22 3/4 to be exact, right? So we've got a great move this morning, all-time highs, right? So we're rocking it for sure, right? We want this first 5-minute candle to settle out unless you are an extreme day trader trying to get that initial rush and you've got the ability to get in and out quickly, meaning your skill set of setting that exit up is quick, then fine. For me, I tend to normally wait beyond that first 5 minutes. I like to see retracements, not just jumping in. So I'm a big fan of letting the stock pull back a little bit, the position pull back a little bit, and then take a move from there. CPOP is halted. Yep, I was looking at that pre-market WK. They were up 74%. I saw something in pre-market. So let's look at one of the faves for today. I'm going to make this 5-minute chart bigger. Let's get a little bit bigger here. And that is GameStop. Guys, you are missing the boat, missing the boat, missing the boat. We're actually going to put together a special report for our students on trading GameStop because they're missing too many opportunities. Every week I talk about it in my own classes, in my own training with my students of, did you make money on GameStop this week? Whether it's funded or non-funded, I don't care. I just care that you're hitting the button and learning how to trade. If you don't know what you're doing, it should be non-funded. And they're not. They're missing the boat because everybody is trained to do nothing other than buy the stock. And again, if we go back here to GameStop, my daily charts, you can see we have not broached that 193.5 level now since back here in May 25th. Now, let me do it this way. Right? When we finally came through it, May 25th is the date that we popped through, and we haven't been back since. So June 25th, right? So we're at about 5 weeks. We've not been back down to that level again yet. We've kind of formed a base. We're pinned between the moving averages here. This is a 55 EMA on the bottom, and it's an 8. The pink line is an 8 EMA. The green is a 21. You can see those at the top, right? So let me get rid of that bar. You guys don't need that, right? So we're pinned in there. I'm still looking at selling anything I can on GameStop. If you were in here last week and I sold GameStop last week, positions. Here we go. We sold GameStop last week at $1.02. That's how much I got paid to place this trade. I only did one contract, just for example purposes. I already have my GameStop. Right now, I could exit out of that trade, give 9 cents back, and call it a day. So from the $1.02, I give 9 cents back. What does that give me? 93 cents. We did 10 contracts, $930. Great premium. As long as the stock stayed above 150, which it did. Right now, GameStop's at 212. As long as it stayed above 150, we're good. This expires tomorrow afternoon, 4 p.m. Eastern. But if we go back and look right now, back on GameStop, we go back and look here, that 150, I can't really get a whole lot of premium for the 150 right now, which is the strike I sold. But what if instead of the 150, we haven't been down below 193.5? What if I did something down here at that 190, 192.5, if it's available, position? Right? Watch. Check it out. So, okay. I got to add some strikes to this so we can see more. I'm looking on the put side of the options. If I'm looking at that 192.5, guys, I could pick up natural, no negotiations. I can get paid 80 cents that the stock stays above 192.5 by mañana, by tomorrow. As long as it stays above 192.5, I get to keep the entire 80 cents. If I want to drop down to 190, I can get 69 cents. And that's not negotiated. That's pure premium. Watch. I'm going to go with the 192.5. Actually, I'm going to go with the 190. I'm going to go with the 190. We're going to sell that option. Again, we do just one contract just to make math simple. I'm not going to negotiate. I'm just going to take it at the natural price. Actually, no, that's not true. Let's see. 69 by 80. We're not going to get the full mid price on it. Let's go up to 73 cents. We'll go up to 72. All right, place the order. Here's what you need to do. Watch me. Duplicate it how I do it. You're going to read this out loud. You're going to sell the 190 put at 72 cents, limit order, sell to open 1 GME, the 2nd of July, 2021, 190 put at 72 cents per share. All right? Why did we read it out loud? Because when you read it out loud, you saw it with your eyes, you spoke it with your lips, you heard it with your ears. And if you're Italian, you were moving your hands around. So you had even another sense in there. I trade like this all the time, right? Have Italian anyway. So you had more senses going. There's a better chance of being right in that trade, all right, of not making a mistake in that trade. And for this position, right, we just set up the 190 puts. For this position, if I look at my delta column, it shows me I have a delta of 8 minus 8, but 8 is 8. Doesn't matter if there's a negative sign to it or not. Negative just means puts. If I have a delta of 8, it tells me there's an 8% chance that this stock will go against me come tomorrow afternoon. That's the odds in my favor. Now, keep in mind, do this 100 times, 8 of them will go against you. It's part of the game. That doesn't mean that you get crushed. It just means you have to manage that position. If something happens and it gets to 190, I'll spend some cash to go back and wind out of that trade. All right? Yeah, AMC to the moon, Patrick. Okay. I mean, I don't know if it's going to the moon, guys. I do think it was brilliant on AMC's part that they sold some of their own shares and took in $1.5 billion in cash or something. I think it was brilliant on their part. I think it's brilliant on the CEO and anybody else internal that is selling their own stock, because the sustainability, I'm not sure. But if we look at AMC, we're in the same exact scenario. The same scenario, right? We have not been down below this 48 level since June 11th. So just about a month, 3 weeks. We haven't been down below that 48 level, right? If you can get down below the 40 level, we haven't been there since June 1. So a full month ago. It's just a matter of what kind of premium is available on the option. Right? Let's go look at an AMC. Guys, all I'm doing is I'm selling. I'm getting paid to trade. Patrick says, how is it brilliant to sell their stock? Because most companies are not going to go out to raise $1.5 billion, Patrick, on their own stock, because that tends to tell shareholders it's overvalued when they start doing that to raise it. The brilliance on their part was, I don't believe it's going to sustain. Listen, does AMC have the backing to stay here forever? I don't know. I would not put my retirement account and bet my retirement account on an AMC or a GameStop holding and running this for the next 10 years. For me, it's not the type of trade that I would do. Could I put some in there? Yes. The brilliance comes from they took the cash while it was high instead of pre-Reddit. It's too much zoomed in there. When we were down here in the $15 range, $10 range, whatever it was, I've got a lot of, let's see if I can delete that out of there. There's a lot of old lines on here that are just compressing everything up. All right. So as we were sitting back here at $5, even 15 when it started to get some lift from them, from Reddit, you know. So, and this is on GameStop, but AMC is no different. Right? AMC is no different. And problem is right now, movie theaters, what's going on? Disney, HBO, we have both of them, Disney Plus, HBO Plus. They're now offering one premium movie basically every month to month and a half for free. You get a month's access to watch it on demand, right? So why do I go to a movie theater and spend $100 when I could stay at home with my family and for $10 a month or whatever it costs us for each of the services, right? So there's questionability of how well the movie industry sustains. The brilliance just came down to raising the cash, pulling that cash in and locking it in while they can. All right, so let's go back to the chart here on AMC. Can we get anything for it today? Well, we talked about 48 and 40. Those are the two levels we're looking at. Now, much lower price stock than GameStop, so it will be a little bit more of a struggle. So on the 48s for today, I can get 14 cents. There's not a lot there, which means the 40s are nothing. And that's okay. That is an option that expires tomorrow. Let's go look at next week's options. Right? If we go to the 40s for next week, I can get 23 cents. And if I'm willing to go to the 48s, I can pick up $1.08. So huge premium for the next week option. I am a big fan of being a little further away. That 48, where are we? We're 48, 58. So we're about $8.50-ish, $8 to $10 away from there. I would like a little more cushion, but I do have my moving average there as a support, and I do have that 0.382 fib line, the 48.29, which is why we're down here at 48. Right? So since we can't get anything here, remember 48 for this week was 13 cents. 48 for next week is $1.05. Okay. So could you go lower? You could, but it's not going to make any difference to me. And what I mean by that is 48, if I go down to 46 or 44, it doesn't matter to me because I've got the 40 right here. So until I can break through that next support level, now you can give yourself a little cushion, go to 47 or 46, just in case the wick stretches down and you're not getting that fear of getting exercised, then I'm okay. Right? So let's do that. Let's go look at a 47, we'll call it. All right? We get 85 cents. So what do? We click on sell. Again, we'll go back to one contract. We're not going to negotiate. Right? If you look at the premium on it, it's 86 by 88. You can negotiate to the midpoint, which is 87. I'm not going to bother. For the penny, if I really want in, I'm just going to buy it outright at the natural. Right? I always want to have my order ticket next to the strike that's highlighted so I could see where I'm at and nothing has changed. Excuse me. Sell to open 1 AMC, 9th of July, 2021, 47 put, 85 cents limit order. It is a credit. Right? That order is only out there for the day. I never let my order sit overnight. We are good. It's still 85 by 7.
Order filled.
Order filled. That's in. And there's my -1 for the number of contracts we have on it right now. As long as AMC stays above 47 come next week, come next Friday, we're good. We have a delta of 15 on the 47. So there's a 15% chance this position goes against me, which means there's an 85% chance that it does not. To me, that's golden. And knowing how that works is very important in options. When I first learned options, excuse me, all they told me was for every dollar the stock moves, that's how much the delta tells you the option moves. If you're buying an option, say you buy a call option over here on GameStop. Let's see if I can get a round one. Of course not. There we go, 70. I have a 70 delta. For every dollar the stock moves, the option moves 70 cents. That's it. That's what I was taught about delta. Delta is a probability calculator. Now, it doesn't mean it's a guarantee, but it is a probability calculator that as long as everything is normal, that's a very high probability of where you're at. Right now, we're at a 14% chance of it going against us. All right? Let's see. Cool, WK. Awesome. Guys, you like these trade setups? Let me know. Talk to me. Show me some love in that chat box. Let me know that you're good here. Guys, listen, you can chase after the high flyers, and I don't mean the price of the stock. I mean the AMCs, the GameStops of the world. You can chase them. You can buy them. You can go long. I can tell you right now of very close friends that did it over here. We're buying in these 2 and 3 days and have been decimated to what their account looks like. Right? I mean, I don't know whether it's going to open up. Let's see. Good. Right where I wanted it to. Perfect, perfect, perfect. All right. So this is a tracking sheet for one of the trainings that I teach. All right. We're up $564,954 year to date from January 1. Every single trade documented right here, every trade that we've done bullish, bearish, winners, number of contracts, day we got in, day we got out, everything. All right, to the point of $564,000. I can tell you how many of those, without even thinking hard, were home run type things where we were looking at GameStop or AMC, and it's zero. This is consistency. I'm the base hitter. Guys, I will be the 340, 350 batter all the time. Right? I'm not the guy batting 280 hitting, 50 home runs a year. That's not me. I get on base a lot, and that is how I've been able to sustain it this game since 1997. It's the only way I've been able to sustain it this game since 1997. All right? Let's keep rocking. All right, let's see what the markets are doing now since we're open a little bit. Let's see what's happening there. So S&P is now up 12.5. Nice. Good continuation through on the S&P from the ES. If we look back to ES, let me bring it current. There we go. You can see that nice push back up on ES from where the index is open. Very nice. All right, so let's go take a look at, we've got AMC, we got GameStop done, right? Guys, let me ask you, how many of you like the this collecting cash? How many of you like that type of strategy where you get paid to trade? Let's see. Okay, Garnet said, can you clarify on Delta? Is it really a probability calculator? If something in the money has a delta of 90, does that mean it's a 90% probability? Whoa. Let's see. A couple other questions came in. It just pushed that puppy right out the screen. Does that mean it is 90% probability of going in my favor? I guess it will be highly loss making of it. So if whatever your delta is, right, whatever the delta is, if we're looking at, let's get rid of SPX, let's go back to, let's get something of more normality. Apple. Nice little pop there. Good. All right. So let's look at Apple and let's look at an option chain for Apple. I don't need all these strikes. Let's go to 20 strikes. If you're sitting right now on the 133 calls, it shows a delta of 95. That basically says 96 now, 95. That says there's a 95% chance that Delta will be above 133 come expiration date tomorrow. That doesn't mean you're going to make money. You buy this option at 410 and the stock drops to 133.25, you're going to lose money. Has nothing to do about making money. The probability comes down to of a stock closing with or without intrinsic value. It all depends what you are doing. If I were buying this option right now, let's see. If I were buying an option today, this is what I'd be looking to buy. I'd be buying this 72. It says there's a 72% chance that the stock will have intrinsic value come tomorrow at 4 p.m. Eastern. That's what that delta tells me, right? If I bought this put on this side, it has a delta of 5. There's a 5% chance I'll have intrinsic value. So as a buyer, I only have 5% chance of it having intrinsic value. Well, I need it to have intrinsic value if I'm a buyer. I need it to go up, right? Well, if I'm a seller, there's only a 5% chance it's going against me. That's the difference in that, all right? Hopefully that helps. So which trading platform to use? Because I'm on Thinkorswim and I put this trade setup in. The numbers are super different. Does different platform users, different market makers? It's possible. Leave it, but the question I want to ask you on TAS, are you using a funded account? And I don't mean are you trading with a funded account? I mean, do you have one? Because I know TAS has something in there, they used to, that if you have a practice account only, they give you the real-time data only for so long, and then they convert it back over to delayed until you fund that account. That's number one. Number two, it very well could be different. This is TradeStation. I use TradeStation. It shouldn't be different market makers. Legally, they're supposed to report best bid, best ask, but we're finding out with the Reddits of the world and so forth, that might not be happening. Let's see. Voodoo Rob, looking for a SPY entry 6-7. 6-7? What do you mean 6-7? Voodoo. You're talking 7-7 maybe? 4, 5, 6, 7. A little far out for me. So let me know what you. I'll get to your question if you put it down in, and once I get to the bottom of the list, I'll grab it. Say, hey, high probability and reliability is your motto. Highly reliable, highly repeatable, and highly predictable. If it ain't that, I ain't doing it. All right. Mitch from Illinois, where'd it go? It just kind of jumped on me. I can't find that comment. All right, here we go. Let's see. Mitch from Illinois, first time here. So glad I found you. Thank you for doing this. Yeah, Mitch, I am here every Thursday at Market Open. All right. Steven said, which, we already got that. Let's see. Yep, Trade Station. Why do you prefer selling naked puts to credit put spreads, especially in a volatile stock like an AMC? It's not a matter. So Clarence, it's not a matter of selling puts preference over credit spreads. A credit spread just adds another level of complexity to the trade. I am not against it at all. I'm a big credit spread seller. I do it all the time, right? You need to first understand naked puts. You could then go ahead and do a credit spread. But the problem on massive volatility, not on the Apples of the world, but on the AMCs and the GameStops of the world, right? If we go to GameStop and we look, right, 207 is historical volatility, and our implieds, even for this week, are well over 100, right? And on our puts, they're 180, right? Depending on the strike that you're at. If I were to go ahead and convert this over to a vertical spread, and what did we do? 47, correct? So we did the 47s. Oh, no. What did I put in on GameStop? Was it 190 we did, or let's see. We got the 190. 190 at 72 cents is what we put it in for. So if we go back and look at the 190s, so if we sell the 190, we want to buy the 187.50, 185, right, is what I'd have to buy. I can get 10 cents for it. See, $5 of risk, I'm taking 7 cents of premium in, and that's for this week. So I can't get anything this week, right? If I go to next week we'll get some premium. If I'm looking at 85.90, I'm taking 85 cents in for that for next week. Now, again, I would probably fudge and go to the 90.92 half. I'd probably try to tighten that spread up a little bit, pick up 35 cents, and if I negotiate as much as 67, all right? But not that I like one better or worse. I like selling better than I like buying. If someone would have taught me to sell when I first started, I would be a freaking Warren Buffett today. And I've always, guys, I'm like some of you, chasing that big nut. Man, I want that big GameStop move. I want that 400-point move. Guys, on my own YouTube channel, I think we put it out already. If not, it should be out in a week. I just did a video on losing $50,000 in one trade, right? Never believed it could happen. Somebody told me you had to lose 50 grand before you learned how to trade. I just decided to do it all at once, all right? And not only did I do it once, I've done it twice. Go figure, right? I stopped chasing those big numbers. I don't need it, guys. I don't need it. If I can make 2 grand, 3 grand, 5 grand on the trades that we do, I don't need it. I just don't. It's nice, but man, I sleep at night. I ain't got to worry about not. Last trades we did, Netflix, $1,100 profit. The day before, Netflix, $3,100 profit. Here, Alibaba, nothing. United Healthcare, $2,300. Roku, $6,200. PayPal, we lost $1,950. Right? Adobe, we only made $780. Alibaba, we made $390. Netflix, we lost $624. Here we go. Home run. Amazon. Anything over 10 grand is a home run. Amazon, 13 grand. Adobe, we lost 3 grand. Right? Consistency. As there's our results through the end of May. Haven't done June yet because it just happened. So I've got to measure all the closes from yesterday, and we'll compile the June numbers in here next. Right? But this is where we're at for the year. right? Up to May, it was 492 was the P&L. All right. And I do it with consistency, not with chasing a dream. That doesn't mean that a portion of my portfolio doesn't go towards the higher risk trades, the GameStops, the AMCs, and so forth. All right. Lots of new comments in there. All right. Yeah, we might break on Qs, Mitch. We'll take a look at it in a minute. Looking for SPY 7.6 next week. Was thinking of the 426. All right. So Voodoo, let's go take a look at SPY. Remember, Voodoo, Mike, you know that I prefer to sell front week, the shortest time possible on. And now we don't have a Monday, but we do have a tomorrow, right? But there is no Monday. So actually, let me go here. If we're looking at something further out, yes, what a setup. What a setup today on SPY. Wow. All right. So we moved right into that 427.16 and bounced right off it today. So we got about $1 move off of that support level already today. So you're talking about Voodoo doing the 7.6 on a pullback to the 428.90. So the 427.16 is the level we're looking at. Voodoo, that to me is a premium level for support. We broke up 2 days ago. We retested yesterday. Today we kissed it and bounced. That's the entry. If you can get any kind of pullback today, anywhere near that 427, that may be your opportunity. You know, resistance up above head is 431. It's 431, which gives us about just shy of $4 to the upside. You might want to fib it and split it halfway in between there and take half the position off. But yeah, I mean, I'm a fan of SPY at this point. I'm in it almost every single day I trade it, but I day trade it. I'm in and out the same day. Much of it being moving average crosses. Voodoo, let me know if that helps. Mitch, what would you recommend to hedge when you're thinking the market's going down? So, guys, for my portfolio, my retirement is primarily SPY, the actual SPY, and Berkshire Hathaway B shares. That's primarily what my portfolio exists of. I write covered calls on them every week, and I buy long-term puts to hedge the move to the downside with the premium that I get from the covered calls. Right? So that's how I tend to hedge my position. If you think the market's dropping, I would hedge with Qs or puts on Qs or puts on the SPY, depending if it's NASDAQ or SPY that you're trying to hedge off of. Yeah, Mitch said I'm coming every Thursday for my lesson. There you go. Neo's rocking, Melody. It's too strong though. You know, you're joining the marathon a little late, right? The place to look, Neo has been clear that a bounce off the 5 moving average was the place to take the trade. Every time we get this pullback to the 5, 1, 2, 3 days, we roll over for 3 days, we bounce for 2. We roll over for 3 days, we bounce for 2. We broke. Okay, so what happens? When we were here, charting exercise, not options exercise. We're sitting here, right? So let's do this. We're here. This is me. I'm back here, can't reach the keyboard. I'm not placing a trade. When we're here, I'm sitting here and I can't place a trade. We get to this. Now I'm sitting straight up. Can place a trade, but I'm not ready yet. I'm waiting for a bounce. Here, I'm on the edge of the chair. Now I'm trading. And right now, where am I? I'm back here. It's moved too much. It's moved too much. I need some pullback. Listen, if you missed it, now you know. Look for those pullbacks. Look for areas of confluence. If I pull this out, we're hitting a major area at 618 is the most important line on a fib chart. If we can hold and break, then the overall bearish pattern might be broken. Bearish meaning this pattern. right? I see short term, we've got some bullishness in there, no problem with that. But if it can't break through that 618 with a vigor, the concern is we may go back down below it all over again. So nice run. Let it pull. Right now, if I got to pull back to that 48.26, I would be all over this because I have a confluence of the 8 moving average and the fib line. And it is the second most important fib line of all fibs. 618 is most important. 50 is next important in the line there. All right. So Melody, I hope that helps. JR, I have students that trade exactly what I do with one contract. Much of what we do is day trades. Much of what we do is day trades on those positions. So as an example, here, it's Thursday, right? It's Thursday today. If we go to Netflix, fairly higher priced stock. If we go to Netflix and we look at an option chain on Netflix, and I am planning to day trade it, I am going to day trade this option right here. It's a 75 delta. I need $7.10 in order to trade this, or $710 to place a trade, one contract trade. All right. When we look at a Netflix, here's the key to understanding the positions you trade. Guys, we talk primarily about the options here, but from a technical standpoint, there is so much that I teach. There's so much that we do to make sure that you know how to trade this. There's more to it than just give me the right trades. Just tell me what to take. There's so much more to it than that. Watch. If we go back to a different template here, I have my Wilder's average true range, right? If I switch to Netflix, on average, Netflix moves about $10 a day from high to low. We're not going to get all of it at all. But what if you were able to pick up $2, $3, $4, $5 of that move? Let's say you can get a $5 move on Netflix. We come back here and we find the option we were looking at. I don't know which one it was. We'll call it 530. It's $5.60. It's a 67 delta. Actually, I think it was this one here. I think we were looking at the 77 delta, right? So it's a 77 delta. If you move $5, let's say it's a 75 delta. Every dollar the stock moves, the option will move 75 cents. So $5, $3, $3.75. You got a little bit of bid and ask in there. So you're looking at your option increasing by about $3 before we incorporate gamma. Gamma helps us understand how much the delta will change. Do I have it on here still? I took it off just to make it smaller for you guys to be able to see everything on the screen here. So it just kind of drops it down. So my gamma, if we move that $5, my delta is going to change by 4 cents for every dollar that the stock moves. So if we go from 78, we won't get quite to 100, but let's say it moved up to 90. That would be 90 cents. The option would move for every dollar the stock moves. You're still only spending $7.50 on the trade, right? That's the key. That means you need to have $763 to do this trade. It's understanding the details behind the position. Please don't get stuck on Amazon or Google that you cannot trade it, guys, because that is not the case. And I realize for some, no matter what, they won't be able to. But if you look today at Amazon, Amazon's one of the stocks on my list for today. And I know many of you like the cheaper positions, but guys, watch. If I'm planning on being in and out of Amazon today, in and out today, I need $2,780 to trade an Amazon position. Amazon moves how much in a freaking day? Guys, if we look at Amazon, the Wilder's average true range, it moves $54 a day. If you only got 20, if you only got a $20 move, and it only had a 70 delta, we'll call it. That's a $14 move in your $28 position. You've got a 58% rate of return for the day. Here, yesterday on Amazon, right? Let me go back here. There we go. Okay. Yesterday, I don't have live data on this chart. Yesterday, we opened up right at our moving average. We made a retest and a bounce. We take the bullish entry to where 34.7221 is an advanced fib line that I just taught. Again, some of our higher level coaching students, I just taught them about this ABC pattern. We drew it in. But guys, bottom line is you took the trade right around. Well, actually, I've got it here. We picked up 25 bucks on this Amazon trade yesterday, right? So you're talking about a move from 34.40 up to 34.70. That's $40. We didn't get it all. We got about $25 of that move. So if we have a $25 move, I normally am not trading anything lower than 65, which it would have at least gone to 70. So let's say times 0.7. Oh, let's try that again. 25 times. Right, let's try it one more time. 25 times 0.7. $17.50. That was the move. That was the premium. That's what we put in our pocket on this intraday move yesterday on Amazon. And by the way, I taught this, yesterday, right? The 30th, Wednesday. I taught this Tuesday. I laid these lines out for my team, for my students, and said, here's what we're looking at. And there was the trade. It moved religiously inside of there. If I turn on the intraday charting, the streaming on here, let's see where it is today. Based on those same lines. It may take a minute to catch up. It's a lot with everything running in my background, trying to get it started while the market's going. What did we say? 34.72 was that upper line, right? So if we go back here, 34.40. Oh yeah, we've pulled back. So we're back to where we were. 34.41.38 is the level we're at now. So I think you guys get the idea. All right. So you don't need a whole lot of money to do it. If you know how to, if you do it right, how about that? How do you manage to trade after being assigned? Clarence, the idea is to not get assigned, to not be assigned. It's to set up stops to get out of the position if it were to go against you. So Nomad says, what fears should I have about getting assigned selling naked calls? The fear is that you will be living under a bridge in a cardboard box, eating scraps from a garbage can for the rest of your life. Did that help? Because if you don't know what you're doing, first off, unless you got a large enough account, and usually if they're a smart broker, a lot of experience, they're not going to let you sell naked calls. You could do a credit spread, a bear call spread, which is selling a naked call and buying an insurance policy. That they'll let you do. Selling naked puts has a limited downside risk. If you sell a $50 put on AMC, how far down can it go? 0. If you sell a $50 call or an $80 call on AMC, how high can it go? Infinite. You have an infinite risk in naked calls. If I do naked calls, I don't leave the computer. And I only do them if I am trying to manage my way like into a spread. That's when I will do a naked call. Otherwise, no. Good. Roy, I'm glad you like what I did on Neo. Great. Very possibly say, hey, I haven't taught that here about the percentiles, so that's why we didn't get into it. Cool. All right, let's keep going, guys. When we look at covered positions, right? Or positions that pay me. Riot, R-I-O-T, okay? Let's get a little bigger picture in there. I like the overall move that Riot has made. Took a little bit of a bounce today. It came back off of the 5 moving average intraday, right? So I'm liking that a lot. That's today's candle. Let's go look at Riot and see if we can get anything for it. And guys, this is what I do. I found the candidate this morning and I said, okay, now what? Now it's dropped a little bit. I probably want it to get a little bit higher. Maybe fill the gap in before taking the trade. I don't have that kind of time available today to wait with you. So let me explain it to you. And if we get back above yesterday's closing price, that is where I'd consider an entry. All right. So if we look at Riot, what am I looking for? If I were going to, I have 2 choices. I have multiple choices, but 2 things I look at. I look first to sell a naked put. And if I can't do it from a naked put, then I'll look at buying the stock and writing a covered call. But I sell a naked put fully understanding that I may be exercised. I need to have the cash available to buy the stock, and I would write covered calls. That's my Wheel of Fortune strategy that I use over and over and over again. This is my retirement. This is what I do. It's Wheel of Fortune, round and round and round. So right now, if I am looking at a naked put, in an ideal world, I want something that has a 20 delta or lower, but really right around that 20. I really try not to go 23, 28. 20 is really where I want to be. So this position right here is the $35 put option. So if we look back at the chart, now I'm going to flip back, and this is exact. Now I have it on multiple screens. The monitor, you're seeing a monitor. I have 6 that are set up on where I'm trading. So if I look at this and say, okay, the position that I'm willing to risk against with the 20 delta is the 34. So my question, and that's for, let's see, tomorrow. If we snap a line at 34, close enough, okay? You've got to ask yourself the question. I ask myself the question, what is the likelihood that Riot gets down below 34 by close of business tomorrow? Well, I know an answer to it already, and that's there's a 20% chance it could happen, right? If it stays above 34, I keep all the premium that I sell. Well, Rob, what if it goes below 34? They'll make you buy it. Yes, at 34. I'm going to buy the stock right now today at 36 and a half, 36 and 3/4. Well, I'm going to buy it $2 and change less tomorrow if it goes down below 34. So I'm not in any different of a position. I was willing to buy it today. So why not sell it, take the premium in? Now, if you believe, oh, no, Riot's going to rock, man, this thing's going to take off, then I would be buying the equity, buying the call. I would not be selling a naked put. You'll get the premium, but you'll miss all of the rest of the upside potential, right? I'm okay with that. If Riot does that, I'm fine, right? I had it happen on Telray. I got in Telray at whatever, dirt cheap, and had Telray taken away from me. I had the stock. Had Telray taken away from me. I had the naked put taken away from me. The position expired worthless because I had sold and didn't have anything that I bought that I owned. There was nothing. Reddit wasn't pushing it yet. I just liked it on the chart as to what the pattern, the technicals told me were good. All right. So for me, I like the Riot setup. I would sell the put. What did we say? 34, right? No, not 34. 35 now. We get 26 cents for it. So I can do this for tomorrow, or I can go to next week and I can look at next week's, find the 20 delta there. I could sell the 33 and take in 61 cents, which may not be a bad trade. Here's why. Normally you have how many days in a trading week? 5, right? Well, we don't have 5 days next week. We have 4. Monday's a holiday. Yeah. So what? Well, theta, time value, theta starts with T. T stands for time. Theta tells me how much an option's price is going to drop per day. So if we're selling the 33, we're going to drop 5 cents a day. So that means if I wait until tomorrow, we're going to lose 5 cents from Friday to Saturday, 5 cents from Saturday to Sunday, 5 cents from Sunday to Monday, and almost 5 cents between Monday and Tuesday when we open up 18 hours later. So we'll call it 4 days at 5 cents each, about 20 cents. That 63-cent option come Monday, Tuesday, is worth about, now it says 61, is worth about 20 cents less. So 41 cents come Monday. Right? So selling next week's may not be a bad idea. Could you wait till tomorrow and sell this week's today? Yeah. What I would be doing is this. I would sell this week's option right here. One contract. Sell to open one Riot, 2nd of July, 2021, 35 put, 27-cent limit order for the day. Day is important. You want to make sure day is in there. Right? We're selling it at 27 cents. Right now it's at 28. I could cancel it out and redo it again. If it moved up, they went back to 27. Or just go with it. And if I get a penny less or they fill me in the spread a little bit, we're good. Right? If this works out, I keep the 27 cents as long as the stock stays above 35. That's $2 lower than where it is right now. But more importantly than the dollar amount, $35 is right about there. I've got a fib level to drop, not a fib level, sorry, a moving average level to drop through. Actually, my fibs are here. All right, so I've got moving average to drop through, right, to get to that 35. And normally I don't snap that kind of line on there for it. It's confusing. Normally, for my targets, I will snap a line like this. Changing to this would be a stop, so I would change this over to red. So this way I know exactly what's going on there. I use that red. I use medium. There's my stop. And when I say my stop, that's where I get in trouble if it gets down to that level. And you can adjust it to exactly 35. I just grabbed it where it was, right? I got close enough with it. All right. Let's see. This is good, deep analysis. Guys, I appreciate, listen, guys, everything I do, remember these three phrases. If you remember nothing else of what I taught you today, remember three phrases. Your trade must be high reliability, high repeatability, and high predictability. It has to be those three. If it's not, then it's a higher risk trade. And there's nothing wrong with high risk trades as long as you put a small percentage of your portfolio into that. That should not be the majority of your money going in there, right? I believe we take trades and we do them over and over and over again. I want trading to become boring. I want it to be, oh my God, I got to press the button. Oh, it's so painful. I hate it. It's boring. That's what I want. Now, I can't get there. I've tried. It doesn't work for me. If you can do it, awesome. But I want you to get as close to that as possible, right? I want trading to be something that is consistent and it's done over and over again. There was a brokerage study that was done on over 12,000 brokerage accounts. And what they found was, and these were professionals, by the way, what they found was that in that 12,000 trades, those 12,000 traders, they made 80% of their profits on 20% of their trades. The other trades, you ready? You ready? The other trades, they made a little, they broke even, or they lost a little. What didn't I say in there? Lost a lot. They manage the position, right? High risk speculative trades are awesome. I love the guys I bought a house with AMC or with GameStop. That's awesome. Or a car. That's awesome. Now go do it again. Go do another one tomorrow. Guys, I've been in the right place, right time. I've had the 6-figure trade wins. I've been there, right? And they're great. Don't get me wrong, man. It's a high that's unbelievable. But here's the problem with it. Especially if you're a newer trader, you get a Superman complex. I'm invincible. I got it figured out. It's almost better off as a new trader if you lose on your first trade, not win. Do I ever sell in the money puts? Melly, there's a company I used to teach for that went out of business because of that. They were selling deep in the money options and got crushed. I do, if it's slightly in the money and we're at a major resistance level and rolling over, yes, I will sell the in the money premium for a call. For a put, again, certain circumstances, but normally no. When I sell, I'm a 20 delta. When I buy, I'm 65 to 85 delta. I am so regiment, so strict, so focused on what I do. I don't deviate from it. Guys, here, look, this is if you guys want to see the trades that we do day in and day out, then could you guys drop that in the chat box there, please? tradewithrob.com/go. Okay. This screen right here, this is and I'm going to show this every week, right? These are the trades that I call out and I do twice a week. I send a video out of everything you need to do. Here's your entry. Here's your targets. Here's your stops, everything, right? So what do we have here? This is 13 lines minus the first two. So we've got 11 trades in here. 2 of the trades are open right now. That's the orange right here. 2 of the trades we did not take. Okay, so keep that in mind. We had 1 trade go against us, right? I made it red. Alibaba. We're up $4,331.25 on this setup, on this structure. That's where we're at right now on our trades, right? If you want access to this, guys, just go to tradewithrob.com/go. It's free. Guys, this is free. Why? Because I want you to learn how to trade. If you learn how to trade, it's more likely you'll continue to come back to this show. You'll tell your friends to come back to this show. You'll make your brokers happy because you're going to continue to place trades. Too many traders wash out within the first 2 years. They blow an account up within the first 6 months. But by the 2-year period, they've stopped trading. Why? Because you don't have a good system of fishing yet. I'm giving you a system to help you learn how to fish. Not only do I don't just say, hey, this is what it is. I teach you when I do the videos, the hows and the whys behind it. And you can go check every one of these videos are listed on our site. Once you register, all you need to do is give us your name and an email address so I can send out where we're going to send, where do you want me to notify you that this is done, that the video is posted. And it is a video. It's 3 to 5 minutes long normally. It comes out usually twice a week is what I shoot for. If I find more, then I do more. But usually twice a week is what we go with on this, right? But it's free setups on exactly what we do, guys. This is an amazing strategy. It's only one strategy. It is mine. I developed it. I created it. I have harnessed and nurtured this strategy to the point that I feel, well, heck, if we got 11 trades, let's say we got about 90%, 85% win rate based on what we're seeing right here so far. All right. So overall, not too shabby, right? Okay. Buxy, do I ever use leaps? Yes, I do diagonals all the time. If you guys are looking, let's see, lift, L-Y-F-T, Buxy would be one that I'd be looking at today, depending on its open. I didn't see it. Is one I'd be looking at, we'll be looking at today as soon as we're done for a diagonal. Voodoo, I appreciate it. Voodoo said Rob has a show every Monday, 12 to 1 p.m. on his site. Good stuff. Yeah, it's free training, guys. Listen, the whole idea here is to get you trained, to get you taught, to get you structured, that you learn how to do this properly. Does that mean I'm the only guy that knows how to do this? Heck no, there's plenty of people out there that know how to trade. I have a system that is harmonic in nature. I trade with human emotion. Normally, I'm the guy selling the average person my position. I'm closing it because I'm getting out based on where human emotion says to get out, not based on some lagging indicator that somebody might be using. And again, I'm not poo-pooing them. I use indicators as well. But my system has morphed into something from my mentor, Vaskin Martin was his name, lived here in New York. He's passed quite a few years back now. He taught me the things about Fibonacci's and how harmonics work before most other people even knew what Fibonacci were when it came to the market. Right? We're talking 1997. I was learning to master the skills of this system, this systematic approach. Right. And everything I do, including that breakout trade, that trade on tradewithrob.com/go, that is a Fibonacci setup. But don't worry. All you have to do is snap the lines where I tell you, and you'll see them right on the screen. Guys, listen. Look, I don't know if I've still got it on there, but let's go and look at CRWD. Okay. Let me take this down. Basically, this is what the video looks like. Right now, this was CRWD. Just so we're on the same page there. It's right here. June 11th was the day I sent it out, right? For June 11th. Let's go find the 11th. Okay, so here was the 10th. On the 11th, we got a retest of this zero line, which is the 227.36. We buy a call option or sell a put, whatever works for you. My first target from about 228, my first target was 238. That's a $10 move. From there, we sell half of our position. My stop was down here at 222. If we were wrong, we get out of the entire trade there. Now I'm going to move my stop up above my break-even point. My second target is up here at 250. Guys, you're getting into 228, you're getting out of 250. Did we do okay? All the details are right there. Color-coded stops, color-coded targets. You know exactly what to do. You know what to do to get into the trade, right? And I lay it all out for you. So it's a Fibonacci setup. If you're familiar with fibs, and if you're not, I really hope you get to spend some time to learn them, whether it's from me or somebody else. I don't care. Just learn them, guys. There is not, in my opinion, a better indicator. And that's where, $500 and something thousand this year in our one system, had you taken every trade, right? That's the caveat. Had you taken every trade, that's what the trade produced, right? And I have traders that only take one contract of each and every one, right? And one of the traders, he did it in, he practiced every trade that I gave them. And March, the end of March, from January 1st to the end of March, he was up with one contract, $40,000. So overall, not too shabby. All right. What do you guys think? You liking it? All right. So Charles said, Rob, I need to get your premium course. Which link do I click? Charles, go to the tradewithrob.com/go. We even offer you in there a 2-hour training on options for a very small amount of money, like $10 or something. My team has got it in there for, right? It's a 2-hour training that we charged $150 for someone to learn exactly what options are and how they work. But even if you, and you always go to our site, Charles, and you'll see tons of stuff there of what we offer. But come check out the Monday training that we do every Monday noon on my website. We're here on YouTube, and we do it on a Zoom setup. So we've got both, and we do Facebook Live as well. But come check out that free training and see what it is that you want to do in options, because there's so many ways that you can go. Excellent. All right. Aaron, you there in the back, or Spencer? Or?
Yes, sir. I'm here. How's it going?
Good. All right. I think we gave him a lot of good stuff today.
Yeah, that was incredible. Thank you for doing that. And yeah, Zinger Nation out there, if you haven't already, go to Rob's website, check that out. He is the absolute best when it comes to these options trades.
Fantastic. I appreciate it, sir.
All right. Well, enjoy the rest of your day, Rob.
You as well. Time for me to get off to my own trading now. Take care, guys. Right. Good luck. Keep crushing it.
Do it. All right. Bye-bye now. All right, y'all. How's it going? I got Wish pulled up here. Coming up right now, we have an interview with the COO of Solana Labs. Our very own Catherine Ross will sit down with the COO of Solana Labs. I'm going to go ahead and get over that now. Stay tuned. We got SPAX Attack coming up at 11, Power Hour at noon. And yeah, should be a great day on the stream.